Hello, traders. Hope everybody is doing well. Get going in a minute or so. Just having a little look at what's going on here on gold. Hi, Royston. How you doing, mate? I'm doing really well, thank you. I'll put the light on, actually, so everyone can see me a little bit better. There we go. It's a bit better. I'm just watching gold here. I'm just seeing how, we've developed this kind of balanced day so far. Obviously, we've just had some US data, which was the PPI data. I think the big data is coming tomorrow, but a really interesting reaction from the US dollar right now. Initially, we had a quite a nice sort of bullish move in the US dollar as well after this core PPI. And PPI came in at 0.5%. So that was above those expectations. The expectation was around about 0.3%. Ended up coming in at 0.5%. So it was expected to grow. The previous was revised down. So whether that was the reason why we're seeing that sort of dollar strength fade at the minute, we'll have to wait and see. But revised down from 0.2% to minus 0.1%. We do have Federal Reserve Chairman Powell speaking as well at 3 o'clock. So that's something we've got to take note of. And yeah, so basically just watching to see what happens here. But I think the big data is going to come US core CPI month on month, and obviously the retail sales data and whatnot. But CPI month on month really is going to be the big one, and the year on year. Are we going to see sort of a move down in that sticky inflation, which is obviously something that we've had a lot recently? The inflation in the US has been sticky. If we just head over to, let's go over to trades and economics, and we'll go take a look at, let's go here. We'll go down to indicators. We'll have a look at the inflation rate, and we'll have a little look at the United States inflation rate. And let's just put it on a line graph. And I'm just going to go over to 5 years line graph. So this is what I mean by the inflation rate being sticky. All right. Since sort of June 2023, we've been kind of ranging between that sort of 3% and 3.7% in the US. So we're expected 3.4%, so still within that range there, that tight little trading range. If we just actually grab a pen tool, let me see if I can bring a pen tool on the screen. Doing okay, Royston? Good to hear. Hope the family's well too. Hi, Vincent. I hope you're doing well, mate. I'm doing really well, thank you. Just taking a look at gold. I actually managed to take a short on gold just at these highs before the data. Was targeting this little pocket of volume that had been building today and ended up sort of cashing out here. I'm looking at a potential second position, but I've gone in very, very light just to see if we do get any kind of push back down to these kind of, to the reaction of these lows. Like I said, we're a bit of a balanced day here so far. Balanced days, I like to sort of, especially day trade, and use these sort of VWAP bands to trade between the highs and the lows, and obviously volume profile and whatnot. But I'll go over that in a little bit. But yeah, essentially what I'm looking at is this area here. This is what we're looking at going into this week. And this is a huge data drop coming out tomorrow. I think this is going to be almost the make or break in terms of, does the market see the Fed cutting rates this year? And that's obviously the hot topic at the moment. And if we see a punch up towards 4% or a breach of this 3.7% range in the inflation rate, then I think that's going to cause a lot of issues. And I think the US dollar strength from that will be quite quite aggressive. Obviously, the miss to the downside is what the market wants to see, especially the stock market. The stock market, obviously, heavily bought up at the moment. Volatility is low. So, they want to see that drop down towards that sort of 3% range. Okay, so if we get anywhere close to 3%, maybe 3.2%, then I think the dollar is going to weaken substantially. So that's my kind of thoughts on it and my opinion on it. Let me know what your thoughts are in the comment section. Let me know how your feelings are towards this trading week. Obviously, big risk day coming tomorrow. So, I don't think I'll particularly trade that move going into this week. I think I'm pretty much going to sit out tomorrow. But I am going to watch it, obviously, and have a little look to see. Maybe I'll pull up another live stream. I don't know yet, or maybe I'll do a live reaction video to the inflation rate data. But I think it's going to be a big event. Obviously, we've got, like I said, Powell coming up at 3 o'clock as well. So I wonder how he will position himself ahead of this inflationary data as well. Got some Oz employment data as well, so we can go over that in a little bit. Vincent, what are your favorite setups for the week? To be honest, I'm looking more across the sort of cross pairs. Let me just go up to the higher time frame here. Sorry, ignore the lines on this gold chart right now. Let me just take off the session breaks. So this is what I mean by we're seeing that sort of dollar selling coming into the market at the moment. Had a little bit of a push higher, started to come back down again. Looking at that weekly chart, weekly still technically bullish. We had an inside bullish week last week. We are making higher highs and higher lows. Obviously, we're in that sort of secondary phase, so that's something to consider. But yeah, one of the markets I did like was pound Aussie. Oh yeah, I just saw your comment there, Vincent. There you go. What's your thoughts on pound Oz short? I do quite like the idea of pound Oz short. Again, from kind of a fundamental perspective, you've got the Bank of England potentially on that sort of rate cut situation now. Rhetoric. We saw the MPC vote coming in at 0.27, I think it was, which means that 2 members are now calling for cuts, where we actually forecasted 0.09, which means no one looked for a cut or a hike, but everyone expected to hold, and that changed. So I think the pound a little bit softer on the back of that. The Australian dollar, we're expecting some good labour market statistics going towards the end of the week. And, if we do see this, I think this sort of CPI data on Wednesday, if we do see a significant downside move in inflation, then I think currencies like the Australian dollar could perform pretty well. So I do quite like Aussie, pound Aussie. And obviously, we came up into this key resistance zone around about that 1.95 handle. We're broken to the downside here. The market trended lower. We've breached these kind of 1.91 swing lows. Now, the next kind of support level for me is down towards 1.87. And that's this low here that started, or kind of formed around the end of last year, start of this year. So I like the idea of price potentially coming down towards this area here from sort of a fundamental perspective. From a technical perspective right now, we're on a little bit of a range, a little bit of a trading range here, which is great. Again, consolidation is volume in the market. So, quite like the idea of price. If it did breach this to the downside, that could be our sort of idea to get short. If I just move over the chart a little bit, you can see we also have consolidation down here as well. Again, the market likes to move between volume points, and this would be an area of significant volume because we saw aggressive buying coming out of that, very aggressive into that sort of key resistance zone. So is the market now going to come down and sort of test this potential area of volume here? So basically looking to see, can we get a little bit more of a push and a potential move to the downside? Now, what you can do, because obviously I like to, be short from highs, we can look at the 4-hour time frame, and you can kind of eye up that level there. You know, you've got that sort of zone where the market's working with at the moment. You know, if we were to breach that zone, we've got that 1.91 handle and that kind of consolidation in here, shallow consolidation. But really speaking, buyers and sellers happy to sort of trade within this minor trading range at the moment. If I just put a sort of zone down in here as well of what kind of price is finding the lows there. So just looking to basically see, do we continue this? Now, one thing I like to look for from a swing trading point of view is a sort of situation where you look at the reversal there. So if I go down to the 15-minute time frame, let me just get rid of the VWAP for a second. We go down to our 15-minute time frame here. I can see that, again, look at that. Consolidation. Price breaks the consolidation to the downside. High impact news drives price into the consolidation. Again, what does consolidation equal? Equals volume. And then the sellers have come back in. Sellers have come back into the market there, push price back to the downside. So I like the idea of being short this market. Ideally, up here would have been a good level to look for that short, because you've got all that sort of consolidation there. You know, if I was just to pop on a fixed range volume profile tool and just go from that sort of area there, you know, you can see large sort of consolidation brings in those volumes. You know, we tried to sort of break the high, didn't work out, price has come back down. So I think if we can stay where price is now, sort of in this area here, you know, maybe there's a good idea to look for ideas around this point. Maybe shorts around 1.9, stop losses above swing highs here. Look for a transition down to sort of 1.89, and then if we breach lower, then you can look to potentially hold the position further. So, you know, looking for something like this down to there. Okay, that's a sort of a higher risk move, because obviously your stop loss is very tight there with 40 pips on pound Aussie. But, you know, you could stretch it above that next level of resistance just to give you a little bit more space, and that gives you a 2R trade. But I like the idea of that. Maybe if you look at sort of a 50 pip stop loss, just to give it a little bit of breathing room above those swing highs there. And if price does kind of come back up and get triggered in, then it could obviously continue to sort of push down after that. But I do quite like the idea of that on pound Oz. Pound Oz is one of the ones on my list. Royston, reference your question about thoughts on dollar and the inflation. It's a big seesaw right at the moment. Consider at the moment the Fed being dependent on the data. Yeah, exactly. Fed very data dependent at the moment, and obviously NFP kind of went their way. So they were, I guess, happier in that sense. You know, so I just wonder if the data is going to go their way again. In terms of CPI coming in lower, then is that going to sort of bolster their sort of expectations that 2 rate cuts could be on the cards for this year? And, you know, how will that affect the US dollar? Hi, CG. Hope you're doing well. But yeah, I like pound Aussie. You know, I think anything sort of yen weakness is still pretty good. I mean, if you look at dollar yen, it did continue to sort of push up. But if you look at the likes of sort of CAD yen, you know, that market's still been doing pretty well ever since it kind of hit the 1.1550s. You know, we did see quite an interesting move back to the downside here. The speculation of intervention at that point. And again, I mean, look at this. Look at that period of consolidation in the market after a rally. What does that bring? It brings volume with it. You know, if I put a volume profile on there to there, point of control of that volume is 111.78, which is where price pretty much found support before continuing to push to the upside. You know, I really like the idea of trying to spot these little forms of consolidation within the market. Depends what time frame you want to trade, obviously. But like if you look at that sort of area there, consolidation. What does the market do? It breaches out of it, comes back into it, tests all that volume in here. If you try and find those little pockets where the market consolidates for a period of time, and then look at that big move away, pull back in, so maybe a bit of a move down into those little pockets of volume again, little pocket of volume over here. Market comes in, retest that area. What is the probability of a BOJ intervention of yen? Seems to be getting weaker. Yeah, I don't. There's been a little bit of a sort of issue with the yen at the moment, isn't there? You've got the BOJ on the one hand that I think are happier to let the sort of yen ride a little bit as long as it doesn't impact inflation. They are happy to kind of leave rates where they are, so which is kind of giving this yen a lot of weakness at the moment. Obviously, officials in Japan feel like that the consumers in Japan or the public in Japan are being really affected and impacted by this weaker yen, so they should act. So I believe at some point this month, I don't know whether that has actually come out yet, whether they have confirmed that that was an intervention or not. But they did say in May they would announce whether that was sort of intervention. But I mean, looking at it from sort of a dollar perspective, that 160 was that sort of highs that we were taking a look at. Those were the highs that formed back in 1990, or just the sort of start of 1990. And we saw obviously a sort of aggressive sell-off coming in from there. I don't see dollar yen prices above 163 right now. I think if we were to get that, that would be pretty impressive. And I think we'd probably see quite an aggressive move higher if we did kind of breach 163. So maybe we're going to see another sort of move back up towards 160 and then, a continuation to the downside at that point. So, it's tough. It's tough to know when intervention's going to come in. I think if you're going to look at sort of interventions, then, those extremes would do pretty well. I think if we had a sell limit order at 160 with a stop loss of sort of 100 pips at sort of 161, that entire move there was nearly sort of a 70 pip move, 7-to-1 move. Sorry. Now, did I do that? No. Let's say 152 was the target. Stop loss 161. Let's just make it a little bit more. There you go. So that was that would have been an 8-to-1 move there, and that would have been a relatively low risk trade. I feel very similar to this move up in here, back up into those swing highs. That would have been a very low risk sort of trade. Intervention was being talked about, and then it came into the market. So, I'm just kind of sitting on my hands a little bit now. I've expected the market to pull back, but 160 on dollar yen I still do feel is something to look out for. And I think that if you're going to look at yen, look at yen across the board for opportunities. If you look at pound yen as well, we kind of stayed within this channel that the market had formed. We've continued to kind of see price kind of make its way higher again. And then look, what was down here? It was a period of consolidation, volume being built up down here. Market comes in, retests that area of volume, and has started to sort of push away again. So, yeah, definitely interesting there. I'll go back to gold a little bit, just having a little look at gold again. I got stopped out on a position just, so I took one winning trade, one losing trade so far on gold. I was expecting a little bit of downside there, but I've just got in with very, very low risk. So didn't come out with still up on the day, essentially. So I'll go over that in a sec. Vincent, Aussie CAD long, what's your thoughts on that one? Yeah, let's have a little look at Aussie CAD. I haven't looked at Aussie CAD in a while, to be honest. Aussie Swiss. Aussie CAD. It looks fairly bullish right now, doesn't it? Again, this is kind of giving me the overall idea that the Australian dollar could be a bit more bullish this week. We're back at these kind of range highs. I don't typically like to get involved long at swing highs. So, that to me, in terms of, where's my risk to reward ratio coming in at, doesn't seem to sit right with me personally. But if I look at it in terms of just like pure price action, if you go to that daily chart, that right there doesn't look very bearish, does it? We've come into an area of resistance. The market has kind of stayed where we previously saw sort of quite a large sell-off. So, that is very, very interesting to me in terms of, could that mean the market is more likely to break higher? Potentially, so quite like the idea of being a buyer in this market. Now, ideally, I would like to be long, back towards swing lows, that just makes a lot of sense. The likelihood of that coming down to here is not low, but considering the price action, like I said, we've got this kind of move here and then a consolidation. I would more personally just like to see price breach those highs, just confirm to me that the market's going higher. And then you can start to look left and look to see where the market has been in the past, where we've seen some big significant turns. So obviously you've got sort of 0.91 could be the extreme area that you could look to see price try and break above. And then above that, really speaking, you've got sort of 92 handle, 93.50s, and above that you've got sort of your 95. So if we continue to sort of breach higher here, those would be the levels that I would be looking to go and seek these kind of swing highs that have been formed within the market. Let's just go flick back over to gold. Obviously, I've been doing a little bit of day trading on gold recently, so just having a little look to see what's going on that market. We've recently started to sort of breach higher here, and I'm just looking to see if there's an opportunity to sort of fade the move. So this strategy in particular is more of like a reversion strategy. So what I've got here is a VWAP on the chart, which is this yellow line in here. I can see that price is kind of failing these highs here at the moment. And then I've got standard deviation lines. So that's a 3 deviation, that's a 2 deviation. I want to basically look into to do is that when the price is kind of in the upper ends of the bands and we have fairly balanced day, which is kind of like what we've got here, where the VWAP is fairly flat. I'm looking to trade from the top of the band to the middle of the band and then potentially to the other side. So I took a short here earlier, profited at VWAP. Well, actually, my profit was this area here. So what I've got is I've got a volume profile on the day so far. So this is from the close to 12 p.m. where we start to get sort of US Open and whatnot. And basically what I'm trying to do is I'm trying to gauge where the volume is on early sessions, because my theory is that the market will come and test those areas of volume, okay? Especially, from a day trading point of view, I'm looking to see volume being tested. And so I expected the volume maybe to come down to this area here, which it did, so I took profits. The market has subsequently continued to move forward from that point. So now I'm wondering, are we going to get a similar setup here? Is the market going to sort of continue to the upside now it's tested that volume, because we are technically trading above sort of the value area high of the pre sort of session or the day session so far, or are we going to see price kind of, do something like this and continue to push lower? So just kind of eyeing this up at the moment. I quite like the idea. So I've took a couple of trades on this. So first short was a winner. I tried to take a second short here with my stop loss above the high. That was a loser, but a very, very small loser. So I'm looking to see, is that the next sort of move down? Now, ideally, to kind of add a little bit more probability in the move lower, I would like to see lower low, lower highs, right? So the market's moved higher, come in, and it's failed to sort of make a new high so far. But if it was to kind of breach that low there, I'd be a little bit more comfortable with potentially seeing price start to pull a little bit lower. But we are seeing that, obviously, that dollar weakness coming in the market Is that going to be a driver behind gold? Correlations between gold and the US dollar index at the moment hasn't been particularly great. So, you know, that's what I'm kind of eyeing up here. If I look at the volume profile from yesterday, you know, we're technically trading within yesterday's value, and auction market theory, or AMT, usually suggests that if we are trading in a previous day's value area, we can go and seek the other side of value, which means that price, you know, may still try and push more towards that sort of 2360 handle on gold in the short term, especially from this kind of day trading view. But I'll keep an eye on that. You know, like the idea of price coming into mean reversion. These are some examples of what I've done this week or last week as well, just to kind of give you a little bit more sort of theory behind it. I'm just going to put the volume profile here. You can see throughout the day, volume really kind of building towards the lower end here, sort of Asia session, going into the start of the European session. Market breaches that. Okay, we're coming into the US session and we've had a decent rally. So all I look for basically, if we're in the bands, we're above that sort of high area of volume. Does the market come back and does it retest that? VWAP is there to help me sort of look at the average of the buying and selling that's going on in the market. So what it basically does, because we're not using sort of futures and whatnot here, the VWAP is formed by, if I just go into the inputs there, the open, high, low, close divided by 4 essentially, and then you get multipliers off the back of that. So multiplier band 2 is 2 standard deviations away, which is the sort of white line that you're seeing on the charts, and then is 3 standard deviations is the sort of light green. And basically what I'm looking for is, has the market expanded away from sort of the VWAP in terms of the average move, essentially? You know, are we overextended? And does it pull back? You know, that can obviously give us sort of day trading opportunities in the market. So, yeah, this is what I used to do with Euro futures. So I'm looking to kind of replicate what I did on Euro futures on gold at the moment, and just having a little go on gold recently. So hopefully that makes sense. But yeah, just looking to see, do we get that kind of reaction back to the mean? Balanced days are usually quite good for VWAP bands, especially if you're looking for sort of mean reversion. This day here is a perfect example of that. So on Wednesday, the 8th of May, we can see that the market is balanced. What I mean by that is it's in a range, essentially. And the market goes from one band to the other side, basically. And you can look to be sort of a seller from the top of the bands, buyers from the bottom, sell from the top. Okay. So that's what I'm looking at here right now. Let's go have a little look at the stock markets then, because the S&P 500 has recovered its move. S&P 500 had a huge drop off of that data. So this is a 5-minute time frame. You know, we fell from sort of 522.23s down to the sort of the 194s. And we've recovered all that move now, which is quite interesting to see. Again, looking at the VWAP bands there, it's a bit disjointed because of that high impact data. But, you know, there's a similar sort of setup there to gold yesterday. But the stock markets are interesting to me. If I go to the daily chart here, let me just remove these blue lines. You know, we're obviously in that risk on period at the moment. The market is pushing to the upside. We're extending higher here. You know, we were talking about potential longs on the S&P 500 back down in this zone. Again, large consolidation. The market comes back, retests that, continues to move on. And now we're kind of heading back to all-time highs. So is that what we're going to see? We're going to see a move up to all-time highs before a drop, you know, depending on the data? or is this going to be the move now where we see price kind of trade into new highs and then above and beyond it, you know, up into, you know, 5.5k or whatever. So very, very interesting. The Dow was one of those where I was looking for longs down in here recently. We haven't really managed to get on any kind of long here, to be honest. I've been looking at the daily closes, and the daily closes have just been pretty bullish until yesterday. We had a bearish close, which I was like, okay, great. Maybe we are going to start seeing that sort of secondary phase in the market where I could maybe then, again, just kind of wait to see how price reacts. Maybe then I can start looking for higher moves. But I'm not going to be looking for that now. Not with the CPI data coming up. You know, big risk event. You know, volatility is great in terms of, you know, seeing the market move and whatnot. But, you know, you've got to be on the right side of the volatility at the end of the day. So to try and say CPI is going to come in at whatever and X amount's going to happen, you know, it's hard to tell. It's hard to tell how the market is going to react. So I can just give you sort of an opinion on what I think could happen. But the CPI data, it's just a big data set, you know, and they come around quite often where lately, especially when we've got sort of big data dropping as well. But I think if the dollar can hold 105s, you know, I'm still a little bit more of a dollar bull, to be honest. Let's just see how that inflation rate comes out. You know, it'd be interesting to see if this all does turn around and the market starts dropping again. I mean, we've had sort of interesting moves here right now. You know, one thing I talked about recently was the weekly charts, you know, especially when you look at it in terms of the indicators that we have on the charts. You know, I've got the stochastic here, and we've crossed over now, which can lead to some bullishness in the market. Obviously, stochastics are a lagging indicator. They're formed by what price does. So, you know, it is a lagging indicator. But, you know, they can just give us a little bit of a visual aid to what's potentially going on in the market, you know. And euro dollar at the minute still stuck at that sort of 108 handle. I'm just going to take a little bit of I'm going to take one last stab at gold right now. So I'm just looking at it on a different screen. I'll take one last stab at that. See if we can get a bit of a move back to the sort of mean reversion there. Let's flick over to that. Oh, there's an alert going off. You can also see there's a little bit of divergence here going on as well. You've got a higher high being formed and a lower high being formed here. So, you know, looking at potential VWAP there as a potential first TP, if we can go on and beat that, come down to the second level, then that'll be good. Like I said, volume being built here. If we look left from yesterday as well, you know, we've had sort of price trying to breach these highs. In here again, look at that sort of volume. Where does the volume drop off? It drops off from sort of 2350 and above. So I think if we breach above 2350 and close above, then I'm definitely wrong, and the market is going to continue and maybe try and head back up to that value area high, which is that 23 sort of 60 handle from yesterday. But you know, you can be on the technical wrong side of the market and still make a little bit of profit. Yesterday I went long, so here we had the market making lower lows and lower highs, and then we came into sort of US session territory, and I started to go long in here, and I was looking to target the VWAP, but didn't quite get there. But I'd already banked 90% of the position and ended up moving stops to break even. Let's move on a little bit then. I can see, Vincent, you've posted a message. Would you buy dollar CAD at the current price? Not ahead of CPI, I wouldn't. Not ahead at CPI, I wouldn't. Let's just get rid of these a second. Now, don't get me wrong. I think 136 is obviously a good level. It has been a good level in the past. You know, if we look at it from these previous sort of swing highs here, you know, the market has found resistance, 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 a little bit of support. From what we talk about all the time, you know, I'm looking at this area here as one big consolidation area. You know, there's been this almost like upwards development of volume within the market, and then we've broken out of it. So we're coming back down. So I wouldn't be surprised if, let's say, data drops tomorrow, we get an initial reaction for some heavy downside. I wouldn't be surprised if we reacted. And then I think if we got to close back above 136, I'd be interested in maybe looking for moves back up to sort of 138, 139. Obviously, at the moment, it's difficult, isn't it? Because I don't want to say yes here because don't really know what's going to happen with that data. But if we take a look at the... Sorry, I just got alerts pinging off on my phone. If we take a look at the volume profile of the entire area, we can see that the value area high is 136. Lots of volume being built here, okay, with point of control around 134.76. So you could look at it in two ways. If there's a big event coming up, you know, is the institutions going to try and target the area of volume that's been built in the market, you know, that 135 level potentially? So we could see a sharp move down into this area here. And that's the problem we've got with event risk. You know, I like the idea of being a buyer above 136 because, you know, the market has sustained above that level for a while. But with event risk, you know, if you try and get long here, where's the safety net of your stop loss? Let's say you liked 136 long. Where's your stop got to be essentially? Now, to be super comfortable, your stop's got to be 134 or even 133.50, which then gives you this sort of trade, which is not particularly ideal, is it? You know, going long at 136, safety net of a stop really 135, because if I look at my stop loss here, well, that's point of control. That could be a magnet for price. If I put it here, I've got all this volume here that could potentially be tested. So yeah, like I said, I think right now, you know, looking at the calendar, don't think it's sensible to do that. You know, if you think that, you know, I'm wrong and you think that 136, you know, because I am wrong, you know, if you think 136 is the play, then take a lower risk position. Don't go and put, you know, 1%, 2% risk in at that point. Maybe you could look at sort of, okay, well, I like 136. I'm going to put in a 0.25% position in here. I'm going to use my tight stop loss. So if it does go against me, you know, I'm not too sort of bothered by that. You know, you could even go in like a 0.2% move. And then if price starts moving in your favor, then you can look to add in. You can look to add in on the pullbacks then, you know, and then you can kind of build a position into the market rather than trying to shoot for glory at 136. You know, in my opinion, you know, a lot of the one thing that we can control as traders essentially is the risk that we put into the market. You know, that's the one thing we have real control over. We have control how we enter the market. We have real control over how much risk we put on the table. And that's the difference between, I think, people that make it and people that continue to kind of ride the sort of break-even path. It's the ability to lose less, essentially, at the right moments. You know, I took a gold short again. It's going against me at the moment, but I'm not really bothered because I've gone with less risk because I know that that was a sort of lower probability trade. Okay. But I didn't know that what the outcome's going to be. So I can control risk. So if I go in at a really low risk, then if it goes in my favor, I can look to add into a full position. If it goes against me, then great. I'll just have more information to use, and maybe information that says, well, today you wasn't right. That's the way I look at it. If you think about it, sorry, I'm going on a little bit of a rant now, so apologies if you're switching off. But if you look at the sort of two differences between sort of a new trader, I'd say, and sort of someone that's experienced, someone that's been in the game for a while, we get taught, or a lot of people get taught that it's all about sort of risking 1 to sort of 2% per trade. Okay. Apologies for the writing. Let me just see if I can get this down a little bit as well. Per trade. It's actually hard to write with the mouse. You get told that, 1 to 2% per trade risk is what you need to be using within the market. And that's great, right? But how are you going to use that risk within the market? That's the difference between a new trader and an experienced trader. So, let's say, price is going up. Let's say there's a moving average through here. Okay, let's say there's an MA there, right? And let's say your strategy is to trade to the moving average because price, let's say, has moved X amount of ATR away. Okay, let's say it's exceeded the daily ATR by sort of 80% or whatever. Okay, and you want to try and trade back to the average. So price is in sort of an upward trend here. It starts to consolidate and then it starts to sort of break to the downside here, right? So a new trader will be like, great, I'm going to take that position short in here. My target is going to be that swing low. So let's just do it in a different color. So that's going to be my TP. My entry is going to be that sort of break there. So there's my entry. And the stop loss is going to go above the swing highs. Nothing wrong with that at all, right? The problem the difference between experienced and new is that risk total there is going to be 1 to 2%. Okay. Now, what can happen sometimes in the market, and I think a lot of you would agree with me, let me know if you do agree with me. Sometimes the market can come up, take your stop loss, and then do this. Yeah, hopefully you can agree with me on that. That's happened to me many times in the past. It happens to me regularly now. But the difference is, instead of risking 1 to 2%, okay, I will look at sort of ATR. Let's just say I'm using the same strategy there. Price is moving up. You get that sort of same sort of dip, market rallies, and then continues down to the, same thing. I may have entered the same position, or an experienced trader may have entered the same position, same stop loss, okay? But I go with 0.25 to 0.5% risk, okay? And that means I lose small initially, okay? I lose really small initially. And it means that I don't try then to chase the market, because a lot of people, when you lose that 1 to 2% here, you give up. You go, well, that was a wrong idea. I'm going to give up. I'm going to get out of that. But you might not necessarily be wrong at that point. It's just that the market's doing what the market's doing. It's moving to different price points. There are buyers and sellers. Maybe there's a big seller here that the market was attracted to on the bid or whatever on the ask. And that could be it. But if you've got in at like 0.25% and then you see you get knocked out here, but then price starts to go in your favor again, well, then I can start to go, okay, 0.25 again. Is the market doing this what I want it to do? Get another lower high, add another 0.25. Price is getting close to my target, add another 0.25. Exit my positions, okay? Whereas you may try and then enter here again, same place, right? Market goes a little bit in your favor, maybe comes to that low, and you think, well, I've got a little bit of my profit back. I'm taking it now, okay? That's what we want to try and avoid, okay? So I always say, if you like an area of resistance, go in small first. If it then starts to go in your favor, that's when you should be looking to add a little bit more risk. Hopefully that makes sense anyway. CG agrees. Royston, got to go. Having a great session. I agree with your view on risk management. It's a long-term game. Absolutely, Royston. Thank you for joining me today, mate. Hope you're good. And hopefully see you soon. But yeah, that's the difference. The difference is we get to control risk. This is how we can control risk, is by using a lower sort of move in there. Okay, so that's what I would say. Very, very similar to this price action you've got here. You know, the market's coming down into your area of support. You know, maybe you think, okay, this is a good area to be involved in the market. You expect price to do something like that. Okay, I'll go in small first because we've got big event risk coming up. You know, I'll go in small, and if it goes in my favor, it goes in my favor. Great. I can look to try and add in on that. If it doesn't, then, you know, what can you do? So hopefully that makes sense. So yeah, I do like $136 CAD, you know, but I can't tell you what's going to happen tomorrow because I don't know. I can only kind of assume that there's going to be a big move. Where that big move will be, I don't know. I'm going to be honest with you. Aussie US dollar is quite an interesting market to me at the moment. You know, seasonally, we should be looking at short opportunities, but we're not really seeing that come into effect yet. Or, you know, we might not even see it come into effect. You know, looking at the weekly chart, we're kind of positioning ourselves around this area here, between sort of the 0 spot 66.50 and 0 spot 64, which is kind of trading within that range now. So naturally, prices at the range highs, I want to be looking at potential downside moves here. But again, is there anything here to tell me that price is going to move lower? Well, not right now. In fact, to be honest, I was looking at ideas to, you know, get short into that volume and then see how price reacted. Obviously, we did push into volume. Price is now moving higher. But again, we're kind of stuck in this moment here now. We've got another consolidation being built. I actually went short Aussie yesterday in these highs, these hourly highs. If we go to the hourly time frame, hourly highs in there, shorted back to the average, and waited to see what price did next. But I like the idea that we formed a consolidation down here. You know, consolidation to me is volume. You know, as I keep kind of harping on about. When the market breaches that, you know, quite often you can look at sort of price coming back to that area to then look for continuations of that. You know, sometimes I like to see, you know, if price starts to change trend, will it actually go to that volume area? And then maybe I can look to try and short to it, essentially, is what I like as well. So yeah, that's what I was essentially looking to do. But that's an area of volume that was built. The market is rallied. We're now in those swing highs here. You know, now it's another point of interest, isn't it? It's another point of, is the market going to sell off like it did there, or is it going to breach it? Maybe try and go for these swing highs as well. So yeah, I like the idea of being short Aussie US dollar, but again, it's thinking about the risk at play. You know, maybe you could look at it from a short term perspective instead. So let's just put on the VWAP. We're above the 200 moving average as well. You know, one thing you could look for maybe here is the fact that we've been fairly bullish recently. Obviously, that's because of the data that's dropped. Maybe if we breach trend here, you know, so maybe put a little alert there. We breach trend there. Is that going to be something that we're going to see price start to come back down towards? You got that 0 spot 66 handle here. You know, maybe that's something you can look at as a little bit of a day trading opportunity. But yeah, I wouldn't be looking for swing trades right now. There's just too much risk out there at the minute, in terms of looking for that. Okay. So maybe keep an eye on that one. Kiwi's in a very, very similar camp as well. Not really doing much at resistance. Dollar CAD we've discussed. Dollar Swiss, really interesting. Unfortunately for me, I've been stopped out on my short on dollar Swiss, and price has gone my way again. So like as I was talking earlier, went against me, but did I have full risk on it? No. So I ended up getting short in and around this area here. I've held this for a while as well, which is more annoying. But that was my stop loss, and my target was down here at 0.9. And I was happy to hold this ahead of the data. The data's actually pushed me out before continuing in my favor. So now, looking at this, now price is kind of doing what I'm expecting it to do. Would I try and get short again? Probably not now because of that data coming up tomorrow. But if that data wasn't coming up, then yeah, I would. I'd be looking at potential continuation. So, I'd be saying to myself, well, there's obviously some support that came in down here. If price finds that support, bounces again, maybe we're going to come back up into sort of these areas of resistance, and that could be an area where I look to try and get short. But not too fussed about this. I'll wait to see if it does kind of come back or not. It's just a shame that I was in short there, in line with the strength meter as well. Strength meter was saying dollar Swiss short. We're kind of breaching this trend line as well. If I look at the average, we're kind of heading back towards the average, the 200 average, that is. So yeah, I like the idea of downside here on dollar Swiss, but just haven't had the idea or the opportunity just yet. So, well, had the opportunity, but it didn't go my way. Basically what I was looking at was the break in this 4-hour low. If we look at it from an hourly point of view, we had that sort of big push down in there. So I like the idea of being short, and yeah, unfortunately, just hasn't gone my way so far. Gold looks like it's rallying now. Looks like my idea of gold coming a bit lower today is not going to play out. That dollar weakness obviously having a little bit of an impact on that. Hi, Amir. Hope you're doing well. Let's have a little flick back over. Yeah, it looks like we're getting that push up into yesterday's value area high. Up here now, starting to break through that volume. We haven't held that volume area now. 15-minute, where we were looking at the sort of divergence between stochastic and price, looks to have been ignored now. So we'll have to just wait and see if it kind of continues to push up. Wouldn't mind technically looking for a short around the value area high either. Because then price would be a little bit more overextended away from the VWAP. So wouldn't necessarily rule out looking for a bit of a position there, because again, auction market theory, if we're within yesterday's value area, price can kind of range and, continue to push potentially. Pal Speech watch party. Potentially. I don't usually run these longer than 40, 45 minutes, and we're already on 55 minutes. So I might call it quits there, but I might do a reaction to the CPI data tomorrow. What time is the CPI data? Is it 1:30 p.m.? Let's have a little look. 1:30 p.m. my time. Yeah, 1:30 p.m. So I might do a little bit of a reaction tomorrow. Maybe we'll do a little watch party for the CPI, see what happens, see where dollar goes, gold goes. So maybe 1:15 p.m. I'll jump on a live stream tomorrow, and we'll watch the live reaction as well to that, because that's going to be sort of a big event in the market, I feel. So yeah, I'll do that instead. Okay, guys, I'm going to call it quits there then. Thank you to everybody that joined me today. Safe training tomorrow. I feel like I probably will jump on another live stream tomorrow. Let me just check my diary, see if I can jump on at that time. Yeah, I'm free tomorrow. I'll jump on a live stream tomorrow around CPI. We'll watch that together as well. And yeah, we'll see how that one goes. No worries, CG. Catch you later. Amir, predictions. Predictions. It's hard to predict an event like this. We were talking earlier. I think if you see anything above sort of 3.7, anywhere close to the 4%, I think you're going to see a lot of dollar strength coming into the market. That'd be a bit of a shock. I think we see anything lower than sort of this 3.4% forecasted, very close to 3%. If we get close to 3%, then I think the dollar will weaken. I think the market will feel like that is what the expectations are on the Fed for potential cuts, you know, considering NFP came in lower as well. So I think that would be more in line with what the market wants to see at the moment. So we'd probably see a little bit of downside to the US dollar, upside in stocks if we see a lower inflation rate number. But we'll watch it. We'll watch it. See if I'm wrong tomorrow. See if I'm right. Let's see what happens. You know, have a little bit of fun. Maybe, you know, take a couple of positions live. You know, I'll do some micro lots or something. Don't typically trade news, so but for a bit of fun, might do that. So yeah, I will leave it there then, guys. Thank you everybody that joined me. Really appreciate that. I'll catch you tomorrow, and yeah, speak to you then. Cheers, guys.